Good afternoon, and welcome to Medical Marijuana Mature Market or Just Smoke webinar. A few administrative details before we begin. If you experience any issues with today's webinar, please contact Irving Levin's customer service at 203-846-6800. At any time during the webinar, listeners can enter their questions in the question box or email them to info@levinassociates.com. Your moderator for today's webinar is Lisa Phillips, editor of the healthcaremna.com. Welcome, Lisa.
Thank you, Kate, and welcome to our audience. And I would like to also welcome my panelists for today. I'm very excited to talk to all of you about this subject. First, we have David Friedman, who is CEO of Panther Capital, and which has invested over $5 million in 20 cannabis companies. He's also the president of Vivid Grow, the horticultural division of Lighting Science Group Corp. Next, we have Michael Gruber, who is managing director at Salvio Capital. He has more than 20 years of experience working with early stage investments in information technology, financial services, energy, and agriculture. And he has founded and run several private investment organizations. And next we have Jeremy Unruh, who serves as General Counsel and Chief Compliance Officer at PharmaCann. Prior to that, he worked in Polsinelli's Chicago office, following a busy career as a government prosecutor in the Illinois State Attorney's Office. Welcome, gentlemen. I know you all bring very distinct perspectives on this industry. I'd like to start with you, David. If you could give us start with an overview of your perspective of this industry.
Sure. I like to look at this industry from the perspective of the introduction of institutional capital. So Michael and I would call ourselves institutional investors. I would use that term loosely in any other space, but in this space, even though our funds are relatively small, we qualify as really the only quasi-institutional capital, along with about 5 or 6 other funds that all have much fewer than 50 million in assets. There's one fund that has a little bit more. But for me, as an investor, I monitor the influx of other institutional investors or participants into the space, and what I'm seeing in the last 6 months to a year is that we're finally hitting a point where people are ready to start stepping in, who are more than just friends and family and high net worth individuals. Most of what I see is family offices stepping into the space. Last year, the legal market is reported to have been about just under 7 billion, 6.7 billion. We estimate the cash crop in the United States is probably between 50 and 60 billion. So you're still looking at relatively low amount of legal cannabis economy versus black market cannabis economy, which obviously leads to a high degree of growth opportunity. Depending on who you talk to, the projections for the legal market by 2020 and beyond are upwards of 20, some people even say 30 or 40 billion. It's hard to say. It's hard to say for a lot of reasons. How fast is the legalization and the legislation going to move? It's not really a growth industry. It's an industry that's converting from a black market to a legal market, which is very unique. The only other thing we have to compare it to is prohibition. And even in prohibition, it was once legal, went illegal, and then came back to being legal again. So really, it's uncharted territory. Institutional investors are hesitant to get involved for reputational risk purposes. It's just very difficult to deploy large amounts of capital into the space, especially if you're not in the real estate sector. That's where we're probably seeing most of the institutional capital enter, is on the real estate side. Firstly, though, you've got a company like Scott's Miracle-Gro, which is a couple $2 billion company in the hydroponic, agroponic market for home fertilizer, and they've invested over 300 million into the space at this point and have committed upwards of 500 million, and they want to own the home grow space. They're doing everything from fertilizer to lighting and anything in between. They're not really going after the commercial cannabis sector, but the home grow market is still a large portion of the market. We focus primarily on ancillary businesses still, and I think that's similar to the same reason why other institutional investors are hesitant to get in, the unknown of the federal legislation. But we will touch the plant under the right circumstances. This is our second fund. We feel like we've got a much better handle on the industry, and we can risk profile a lot better than we could 3-4 years ago. And I know Michael sits in a very similar place. Their fund has made a couple of investments in this round. We're still raising capital, but we have over 20 investments in the space in the last 3 years up to this point.
Wow. Oh, good. Michael?
Yeah, no, that was a great overview, David. The only other thing I would say, just for everyone on the call, to make sure we distinguish between the touch the plant and not touching the plant. So touching the plant is traditionally meant to define anyone who's either growing, processing, or dispensing marijuana. So that's primarily the growers. It's the folks who are then converting the plant material into oils and extracts and other edible products. And then lastly, dispensing is those retail operations, dispensaries, where all of us would go to either in a medical or recreational state to buy marijuana-based products. So as David mentioned, yeah, our fund, Salveo Capital, is primarily focused also on the ancillary space. If you look in totality, the ancillary space is several multiples larger than the actual touch the plant space. But the notion is that we will be and are willing to invest across the entire supply chain and spectrum. And as you start to see, as many folks may know, in California, January 1st, 2018, unless it gets delayed, is the time when full adult recreational market will be open in California. California will be the largest market in the world. And so obviously there's a number of huge opportunities in California that touch the plant that obviously we're looking at, and which we believe that they could be the leaders of changing a number of things that we're seeing in other markets. But yeah, we're again from the ancillary side and where we're focused, and I know David sees similar things. We typically look at things relating to software, technology, data analytics, financial payments and services. Because we'll probably talk about it more. There's a big issue about operators of having normal checking accounts and doing banking and being able to do compliance. Looking at ag tech and sort of next generation cultivation methodologies as sort of efficient producers will be critically important going down the road. Science and genetics is the next one, and then lastly sort of business services.
It sounds a lot more involved than all this, more involved than cancer, immunology, drugs even. All right, thank you. Jeremy, I think we have some slides for you to give us a visualization of what states are in this market. There we go.
So let me first draw a distinction here between myself and the other two presenters. They are investors in the space, and they come at this from a risk management opportunity perspective kind of across the industry. I'm an operator, so I'm the general counsel of a company that actually cultivates and dispenses medical cannabis in several states. And so I have a little bit of a different perspective and philosophy because I tend to be more focused on our organization and how our organization fits into the greater environment of the cannabis space. And so they drew kind of the first fundamental distinction in the cannabis space, which is, do you touch the plant or do you not touch the plant? Are you a lower risk, bigger sort of opportunity, but perhaps the returns have to be measured over a longer period of time, versus kind of the high risk, high reward thought process of actually having a license, operating in contravention of the United States Controlled Substances Act, and then perhaps the reward that goes along with that increased risk. So there's a little bit of a difference in perspective, and so what I can bring to you is sort of my perspective. So the first slide here is simply, it's a breakdown of how the country is evolving when it comes to to cannabis. It's often said that the cannabis industry evolved from west to east, and then compliance is sort of evolving back from east to west. And there's a reason for that. And the reason is that in the United States, the cannabis laws sort of sprang forth, the modern cannabis regulatory scheme sprang forth from Oakland, California in about 1993, and it was a response to the AIDS epidemic. Oakland passed an ordinance saying, okay, we're going to legitimize existing black market industry. If you are currently growing for your sick partner and you've got 5 plants in your basement, we'll let you have 10 plants in your attic. And then the next iteration may have been something along the lines of, you can't sell it, but you can give it to friends and family. And then the next iteration was, okay, you can sell it, but it has to be under a non-for-profit structure. And so what you see in the West, whether that's California or Colorado or Washington or Oregon, doesn't look like the industry looks like in the East. And in the East, in the last handful of years, Illinois in 2013, 2014, and New York in 2014, 2015, which is kind of where I sit, our organization sits, the regulators sat down and they basically created an industry from scratch. They got out their pads and papers and they said, what's this industry going to look like? And so what you see in the East is a lot different from what you see in the West. We take for granted things like product recall plans, which is something that in the West they're learning to get their arms around in anticipation of the adult use law that will be going into effect at the end of this year in California, hopefully, which was referenced by Michael not too long ago. So the 29 states have some sort of medical cannabis regulation, and of course we also know from the Journal of the American Medical Association a couple years ago that these states that have a medical cannabis law have a 25% lower death rate from opioid and heroin overdose. There are 8 states that have an adult use law, and adult use is often termed recreational. There are reasons why adult use might be a better terminology. If I'm 55 years old and I don't sleep very well because I've got a bad back or I have a lot of anxiety or my Crohn's disease doesn't allow me to, but I don't necessarily have a card and I'm using cannabis, that's not really a recreational use, that's an adult use. So I think there's a little perspective there. And then 13 states with no laws. Is there a next slide?
Yeah. Kate, next one.
This is a slide that we developed. This is probably maybe a year old, but Cowan and Company put together a compendium of the industry a year ago, 18 months ago, and suggested that there would be an adult use market of $50 billion by 2026, and that just compares to the tobacco and alcohol markets, over-the-counter pain medication market, and the opioid market. And so, is there a next slide? And then this is simply our projection of the market outlook. And this is from the 4th edition. I believe that the 5th edition has come out, so these may be a little bit dated.
Okay. Yeah. All right. Well, thank you. That's a different overview. I was going to say that in looking for stats on this, just last week, a press release came out saying that recent report from, I want to say, New Frontier says that medical marijuana sales will reach $5.3 billion this year, and by 2025 they're saying it could hit $13.2 billion. But meanwhile, adult use sales.
I think it's already hit $7 billion, so we're already at a base $7 billion.
Yeah, you know, I wanted to clarify because I should have said this in my overview, and I apologize. The industry is also not only divided between touching the plant and not touching the plant, but also between medical and adult or recreational use.
Right.
And oftentimes the figures are quoted independently of one another, and then sometimes they're quoted in a combined basis. And so the report that New Frontier is actually one of our investments. We were, I think, the second investor in the company. But what you're quoting from New Frontier is a division of medical versus adult use, and they were able to get those figures from the states that report them. So of the $6.7 billion in 2016, roughly 5.5 was was medical, and the balance recreational. And then the $13 billion that they project by 2020 is, again, strictly only the medical use. And as Jeremy said, it's important to understand that the difference between medical and recreational in the industry is not the same as it is, to the layman or to the investor landscape. I think that anybody who invests in this industry doesn't really tend to differentiate between the medical and the adult use marijuana for a lot of different reasons. And again, Jeremy alluded to this, but self-medicating is just something that we do in this world. And some people come home from work and have a glass of wine to take the edge off, and some people come home from work and take an opioid, whatever they might have to go to sleep or whatever it might be, and cannabis falls into that same category. So at the end of the day, if and when, not if, but when this becomes federally legal, I think you're going to have a really tough time differentiating between medical and adult use cannabis, because I think that fully 60% of the medical cannabis use is for the conditions that we don't have in Illinois, but that fall under the either chronic pain or anxiety, which I don't know that you'll ever see federally legal prescriptions for those things. There will probably be over-the-counter remedies. And so the difference between medical and adult use marijuana is an important distinction when you're quoting the facts and figures, and also when you're looking at the market bifurcation.
Okay, I'd like to step back actually and say, yes, this is still considered a Schedule I drug under federal law.
Yep.
How, and you allude to that may be going away soon. Could you talk, everybody? All right, Jeremy, you're laughing.
No.
Let's talk about that.
Go ahead, Jeremy. All yours.
I don't know that I have any greater insight into this. Cannabis is a Schedule I controlled substance under the Controlled Substances Act. So it is illegal under federal law to recommend it, to possess it, to use it, et cetera, et cetera. However, state laws are being passed and programs are evolving in these states. And so the federal government, and I guess we kind of have to understand, who we're talking to, the audience, the way that cannabis is viewed, and I say regulated, but I use that term loosely because these aren't regulations, is under what's called the Cole Memorandum. There's a guy, James M. Cole. He was an assistant or a deputy attorney general back in an Obama era Department of Justice, wrote a series of memorandums. The most recent one was, I think, August of 2013, I think, and it basically said, here's the federal perspective on the enforcement of the Controlled Substances Act. We understand that states are, and this was an open letter to the 94 United States attorneys around the country, and it basically said, we understand that states are setting up these medical cannabis and adult use regulatory schemes, and as long as these states are staying away from certain enforcement priorities like money laundering activity, marketing to children, driving under the influence, moving cannabis from a state where it's legal under state law to where it's not legal under state law, cartel activity, money laundering. I think there's 8 of them. As long as these licensees are staying away, they're operating in a robust regulatory state environment, and they're staying away from these enforcement priorities, that we don't consider them to be a federal enforcement priority. And so that's the backdrop or the environment, the federal regulatory environment under which this industry operates. And at the same time, the Department of Treasury put out a memo, their Financial Crimes Enforcement Network, which is this clearinghouse of Treasury enforcement agencies, including even the FBI, which is not Treasury, but the Comptroller of the Currency and the Office of Thrift Supervision and the FDIC and the Federal Reserve. Whenever there's an activity that needs enforcement, they feed it up into FinCEN, the Financial Crimes Enforcement Network. Well, FinCEN issued this memo telling banks, listen, if you're going to bank a marijuana-related business, then this is the due diligence you need to conduct, and this is what you need to do each year to make sure you're properly monitoring the activities of your account holders for purposes of anti-money laundering and Bank Secrecy Act purposes. So that's the environment in which we operate from a federal perspective.
Okay, and does anyone see, well, we know Jeff Sessions may be writing memos now. What do you think about the Trump administration?
Yeah, no, so the administration has not been, I would say, they haven't been supportive of the industry, especially, Trump's ambivalence are not becoming clear. Then obviously Jeff Sessions' comments back in February, where it was unclear exactly what was going to happen. And in Sessions, was scaring a lot of folks of believing the whole idea of additional enforcement upon states, even whether or not they're medicinal states or adult use states. There's been a bunch pushback from that recently. The governor of Colorado, Hickenlooper, had recently sat down with Jeff Sessions, and after that, Hickenlooper had stated that he believes after that discussion that Sessions does not desire and will not go ahead with any enforcement action against any medicinal marijuana businesses. In addition, there's been some open letters by the state attorney generals to the attorney general itself about stating their views on this, and especially those states which already have laws on the books to continue to sort of support state rights. And there's lots of current bills being put through the floor right now, which is doing a number of things. One is, which was related to this 280E, which is part of the IRS code, which prevents businesses from doing standard deductions for their businesses, like salaries and rent, etc. That's one of the big issues that's hurting marijuana-based businesses. But there's bills in force to try to remove that barrier from businesses, which there's other things about moving or descheduling or rescheduling from a Schedule 1 to a Schedule 2 or Schedule 3, which will open up the banking system. And it would also start to open up a lot of the research and development and grant funding at universities and others, because ultimately for all of us who we truly believe in the medicinal qualities of the plan, as well as this being a opportunity or sort of freedom or right for folks to decide on a state basis, in the end we should really let real data decide and dictate what works and what doesn't. And so this reclassification or rescheduling would allow for all this funding to actually do sort of really concentrated studies on the effects of this plant, ultimately get to personalized medicine where we personally believe it'll ultimately go in the future.
Oh, interesting. Okay, anything to add, David?
I think ultimately this is an issue that this administration is going to have a difficult time doing anything but taking a hands-off approach. And you add up the approval, Republicans, Democrats, and everybody combined, Congress, Trump, and they don't even come close to the 80+% approval rating that legalization of marijuana has. These guys all have to be reelected. They all, at the end of the day, make decisions based on that. I see cannabis where same-sex marriage was 5 years ago. The train's left the station. It's not going to stop. It's, I think it was Peter Thiel who said, if you want to predict the future, find something inevitable. I believe wholeheartedly that cannabis legalization is inevitable. I think ultimately that this administration and the industry will forge an alliance. It might take a little while. We all read the news and can see that they're extremely busy, can't get out of their own way in a lot of different areas. So who knows when this will come to the forefront. But I do think that what will happen ultimately is the industry and the government will forge an alliance to go after the black market. And that black market is different today than it was 10, 15 years ago. You used to have a black market 10 or 15 years ago that was all drug dealers. Now the black market is converting, and what people, I don't know that they really understand, fully at least a third, maybe as much as 50% of the marijuana that's grown in California gets shipped over state lines to states where marijuana is not legal. Why? Because they could get $2,500 or $2,600 a pound instead of $1,500 or $1,600 a pound. So there's a black market even within the legal cannabis market that exists, and ultimately I see both the industry and, as Jeremy pointed out, the Cole memo, which forces companies to operate within the legal framework. That's where I see everybody coming together. I'm concerned as everybody else is, but I personally think this is a lot of bluster, and now's probably one of the best times to be entering the industry. I think what we'll see in the next few years is going to shape the next couple of decades.
Okay, thank you. I just would like to remind the audience that we welcome. Oh, we've just gotten a question. Before we go there, I would like to also talk about the various ways, things to be investing in this industry, touching the plant, not touching the plant, such as IT functions that automate compliance and payroll and background checks. There are companies out there doing that. There are startups building on-demand and subscription-based services to either extend the footprint of dispensaries or replace them, I guess. As you said, cultivation techniques, all kinds of technologies are coming along there. And especially in the medical marijuana space, a lot of startups I see are developing edible medical marijuana products and medication delivery apparatus. I mean, I've seen a Keurig type coffee pot that will dispense marijuana that way. Start your day, get your week off going. And I mean, all of these need analytics platforms specifically for the cannabis sector. As you say, there's still a lot of these regulations. Which area do you see as the most promising, perhaps?
But yeah, let me just state, at least our view of the industry. Again, everyone has to remember that, again, as talked about, every single state has its own rules and regs. So if each state went ahead and legalized, but we had no federal legalization, we'd have 50 separate markets, and what means that if you produce in that state, it could only be sold in that state, which means there's inherent inefficiencies in both the grow, the production, the processing, the marketing of all those products. Many of these companies cannot do advertising through traditional social media, no Facebook advertising, nothing through Twitter, etc. So it makes it more and more difficult to get out to your end consumers. So with that thesis and that understanding comes, the view that how do you become efficient? How do you create brands that could ultimately transcend each of these state borders? And then ultimately, how do you become an efficient producer, producing the best product possible at a low enough cost? Because someday in the future, whether it's 3 years or 5 years, it'll be federally legal, and which you as the producer are going to need to compete with everyone else. And so that just sort of frames our viewpoint of a number of areas which are of interest. So again, because we believe that the wholesale cost of flower will continue to go down, and there's been significant decrease in certain states like Colorado and Washington, 30 and 50% decrease on the wholesale price of flower, that we believe that lots of techniques relating to growing, whether it be relating to tissue culture propagation, of which we've invested a firm in that space, or it's advanced sensor-based automated growing techniques, or it's based about new biologics that are relating to increasing yield of a plant. All of those improved yield sort of strategies are very interesting. And as David mentioned, folks like Miracle Grow and down the road like Monsanto and Dow and DuPont are likely to be folks who will get into that business and acquire them. In addition, I mentioned, brands. So as you see, there's a number of brands in California and Colorado elsewhere who've been selling for a number of years. You're starting to get a good affiliation and a loyal following for those, and so you're already starting to see, and even in Illinois, we have a number of those brands which have started to partner with folks like PharmaCann and other operators to have those products in individual states, but they're licensing the name and the brand, but all the production of the plant and the extraction and the processing is being done locally. So there will continue to be unique brands that will resonate with customers, both for edibles and products, but ultimately also in terms of lifestyle brands. We're seeing folks living the healthy lifestyle, the wellness lifestyle that may be associated also with cannabis. So those are just a few areas, at least, that we see sort of trends and where we're continuing to look at very closely.
Okay, interesting. David, Jeremy, we've got a question from the audience. What is the largest market for medical marijuana? Obviously, is it cancer patients, the elderly who suffer from all sorts of aches and pains, or something else? I believe, Jeremy, you have an answer for that.
I know that in Illinois, in Illinois, I can tell you that the standard sort of quintessential patient is a 55-year-old white woman with cancer. That's the standard of who comes into our dispensaries. Not the only person that comes into our dispensaries, but kind of the standard, the plurality maybe. I think that as far as conditions go, I think chronic pain is probably the broadest condition, and therefore it has the opportunity to be the largest sort of market methodology in the cannabis space. I can tell you, Illinois does not have chronic pain as a condition. New York recently implemented chronic pain as a condition, and I think we're starting to see an uptick in patients in that state. Maryland, which has a program that is currently sort of developing, meaning people have been awarded licenses and they're building out their facilities, but they haven't started to grow and sell cannabis yet. Maryland, which is one of those eastern states that I talked about, the great divide between the East and the West, it's one of the more rigid regulatory schemes that has chronic pain. And so I think, to me, that's a bellwether. How Maryland develops through its chronic pain condition as a market in general is I think, going to be reflective of how other states in the East then sort of transition. Massachusetts may be another good example of that, but I think chronic pain is probably it.
Yeah, and I would say the other one alongside of that would probably be, if we lump them all together, sort of depression, anxiety, PTSD, sort of the other big combined one. Unfortunately, our veterans are just not able to access marijuana, given the Veterans Administration sort of stance on it right now. But if you allowed PTSD as a condition across the country, it would easily allow for millions of patients right away.
Wow. Okay. David?
Yeah, I think, the comment that I made before, chronic pain, anxiety, PTSD, those are the categories that see the largest patient count. And, in all honesty, they're the ones that can be the most easily abused from the perspective of trying to get a medical card when you don't necessarily qualify. Those are things that can be faked. I'm not saying that any of those are fake by any stretch of the imagination. They're very real. But you go into California and you tell a doctor that you have back pain, you're going to walk out with a medical card in about 10 minutes. You pay your $100 and you're off to the races. And so those are the largest patient base in the states that allow those. As Jeremy indicated, some of the states, especially the more recent states, aren't allowing some of those. So that kind of begets the question as to whether or not, there's really a difference between, the adult use market and the medical market. I think only time will tell, and I think Michael's point was a good one. Even if you do find it to be legal in all 50 states, right now you're talking about 50 different state
markets,
regulatory systems. That's real challenging for any commercial economy to try to manage.
Sounds like the insurance market to me, the health.
Very much.
Yeah, very much, exactly.
Okay, another question. Well, to this point, actually, if all states at some point legalize marijuana for recreational use, will that make the medical market obsolete? Or will the medical market evolve into a prescription level doses in some type of in forms of pills or something? Perspective.
It's a good question. We're already seeing the collapse of medical markets in a number of states. So Washington State has already sort of collapsed that. They've gotten rid of pure medical, and so it's a combined market of adult use and medical. There used to be a big distinction between products, between medical and adult use, where you'd find higher dosing or higher THC percentages on medical. We're finding that less and less. You could find in traditional products easily mid-20s percentage THC, in concentrated products 75, 80, 85% THC percentage, even for recreational. It's just as powerful or just as high as a dose as medical. The only other difference really between medical and recreational is the tax rates. So for folks who truly need it for medical conditions, each state is different, but there may be 7 or 8% sort of tax rates on medical, whereas you could find 30, 35+% tax rates on adult use states on the product there.
Wow.
So ultimately, it's trying to find out, how do you regulate? How do you get the right medicine to the right people? How do you make sure it's affordable if they truly need it? But ultimately, as we all believe, states are looking for various scenarios where they could actually generate tax revenue. And so there's lots of systems being thought, just like in California, you create a three-tier structure, very similar to the alcohol world, where you have bottlenecks of where the product's being sold, so when regulating where it's going, where is it being sold, so you can tax it appropriately. But there's real money in taxes for the states, and so I think ultimately, that's going to determine whether a medical market, exists or not.
Yeah, I would agree largely. I would say I find it hard to believe, you flash forward to a point when cannabis is legal for adult use in all 50 states, whether that means federally or not. I find it hard to believe that a medical market will continue to sustain itself. There is no other drug out there that is legally used for both medical and recreational purposes. There are plenty of opioids that are used for recreational purposes, but not legally. I think it would be very, very difficult to build a framework legislatively and otherwise to keep both markets operating side by side. I think the states have the incentive, as Michael just said, to generate as much tax revenue as possible. If anything, potentially insurance companies may step in at some point and agree to cover cannabis use for certain medical conditions. I still ultimately don't think that we're going to see a long-term medical marijuana marketplace for anything but over-the-counter use. It's going to be like, allergy medication, I believe, once it's fully matured. Now, that could be 20 years. I don't know. But if you're asking the ultimate question, that's my personal belief. Jeremy, you're closer to the actual sale of the product, and so you might have different market validation than I do.
So I guess I break it up into two questions, or two sort of, when you say medical marijuana market, I break it up into two. I think the first sort of question is the retail perspective. Will there be a time in some state where you're standing on the street in front of two businesses, and one is an adult use or recreational cannabis dispensary, and the other is a medical cannabis dispensary? I don't think that will happen. And I do think that states right now that are transitioning, Massachusetts is a great example. I think California is an okay example. But states that are transitioning from a medical framework to an adult use framework have to struggle with, gee, we've got this old vestige regulatory structure that is within the Department of Health because it was monitored by the state's pharmacists, you see, regulators. And now we're transitioning over into an adult use framework, and that's going to be monitored by the revenuers, the tax folks. And how do we, does one just wither away and die? Do we keep them both? Do we merge them together? Do we move this? And so I think that is sort of one question, and I don't think that there will be two, at least not long term. I think there may be two for a while, and then one morphs into the other, or one just withers and dies on the vine. The second question to me is the development of the products. And so in the East, you find some of those states, Pennsylvania, New York, Ohio are good examples. They call those oil-only states. So there's nothing you can smoke. You can't take green leafy bud home to smoke it. You can't buy a brownie or a cookie or a sweet edible treat at these dispensaries. the forms come in like a vape pen, like an e-cig, or a capsule, or a tincture that you drip under your tongue, or perhaps an enteric feeding tube device, or a transdermal patch, a suppository even. And so I think that at some point in time you are going to see this when something happens at the federal level. You will see the FDA step in and say, okay, we govern food, over-the-counter medications, nutraceuticals, and pharmaceuticals. And you know what? You people who are extracting and formulating and making these products, you're going to have to come fit into our framework, or you're going to have to ignore us and keep kind of operating in this quasi-illegal state the way that we're doing right now. And I think that transition will kind of break along the lines of extracted and refined products and then just regular bud. And so to me, those are two questions. I do think that there will be a market for a topical application that my mother-in-law will rub on her aching joints, because my mother-in-law is not going to smoke a joint. And so I think that there will be applications in the medical space, and perhaps those end up being nutraceutical or over-the-counter from a regulatory perspective, but I do think that there will be a medical market versus a wellness or an adult use market, but I do think it's going to be a spectrum. One will blend into the other, just like a nutraceutical does at GNC.
Okay, well, that sounds as if the pharmaceutical industries, big pharma like Pfizer and so on, are not looking into this very seriously if everybody's going to be self-medicating, if it's all going to be in adult use.
I don't know if it's going to come from big ag, Monsanto, DuPont, Pioneer. I don't know if it's going to come from big pharma, the Pfizers of the world. I don't know if it's going to come from the Altrias, the big tobaccos of the world, or the Bacardi groups, the big alcohols of the world. But I do think at some point that these entities will get into the space when they feel the time is right. At the I suspect there will. Right now, there's a lot of vertical integration in the cannabis space. People who grow also process and dispense. That's going to break up because Monsanto doesn't want to run our dispensaries, and yes, doesn't want to run our cultivation centers. So I do think you will see that come in. Look at who's at these conferences. Waters, which is an analytical. They make big analytic equipment that are used in laboratories. They're the biggest vendor at these trade shows. You know, the Gavita lights. These folks are already beginning to turn their attention to the space.
Okay. Well, I'd like to keep moving on. Somebody has asked, where do you make money in marijuana? The growing and the processing, or the retailing? But as you say, it's all break up.
Michael and I have fun with this one. I'm going to let you. We just had this question last week, so go ahead, Michael.
Yeah, I think the truth is, well, a lot of the illegal guys are making money because they have no regulation on them. So, but as we're moving to this legal market, I would say truthfully, a lot of people aren't making money. You have this overhang of this 280E, which doesn't allow people to deduct standard deductions, but they still have to pay the Fed and Uncle Sam their taxes. Uncle Sam's still happy to collect the taxes, but not deduct expenses. And then you have lots of issues and more expenses because you don't have a traditional banking channel and all the traditional checking accounts and banking loans. So it's still a difficult market, folks, and this is for people who are generating lots of revenue. The people that I do see are making more money, number one, if you're on the cultivation side, depending on state, because like I mentioned, there's a lot of states where the price of the flower continues to go down. So you would need to be a high efficient producer, being able to produce, in the order, and depending on how people measure it, anywhere from $400 to, $800 for a pound, cannabis, or being able to produce at a low scale, really good, and then being able to be vertically integrated of actually having dispensing operations, so you're able to sell through your dispensaries at the same time. Because retail pricing is held up pretty firm, whereas on the wholesale side, the pricing has come down. So if you're able to have an outlet for your sales at a much higher price point at the retail side, it goes well. The folks who are processing, I would say more than those two ends of the spectrum, besides cultivation and dispensing, the processing folks, the folks who are making oil, the folks who are extracting, they are making money. A lot of those folks are making money. They're able to turn raw biomass plant material into these oils, which are commanding very high pricing. And as was being alluded to Jeremy and even David, if you look at the demographics, you know, these older 50-plus-year-old people, again, they're moving from traditional combustion to vaping techniques and other oils and bombs, etc. So the oils and edible form of products is the highest growing category within the space. So, you know, that's where I see a lot of the folks making money there on the processing side, and then ultimately, you know, even though folks aren't making money now, it's in these sort of picks and shovel, these toll takers that, regardless of you as an operator of the state, that these companies need to buy the products or services. So, you know, the lighting companies, the certain folks who are providing nutrients and fertilizers, those companies are growing well. You know, it's too early to make money because they're spending money for growth. But ultimately, you know, the belief is it's those type of companies which are going to be able to make good money and then be able to ultimately sell and exit those companies.
Okay, so it's not the dispensaries. David, do you have a different perspective?
I would concur. I'd love to get Jeremy's input as well, since he's actually operating a facility. But, you know, it's very difficult at this point to run an efficient operation when your output is regulated by, you know, state laws that don't allow you to centralize your distribution. I mean, Jeremy's got operations in 2 or 3 different states, and he's got manufacturing facilities in 2 or 3 different states. He could theoretically have it in one state and ship to reach his customer base, but he can't do that. So I see most companies that are in the space that are operating legally and complying with the laws struggling to build scale and reach profitability. I see the picks and shovels starting to become profitable, the nutrients providers. You know, I've stepped in to operate a lighting company that spun off a division to just address the cannabis space. You know, it is a profitable operation. You know, the nutrients guys and stuff like that. And there's also all the other ancillary businesses. You know, my previous company, we had a media company. That was a profitable company. We ran trade shows and digital content and print magazines. So there are companies that are making money, but you know, it's difficult to do so touching the plant. Some of the dispensaries that operate well, especially some that have gotten scale, some of the Native Roots and Strainwise and some of the ones in Colorado, those guys are also making money. You know, but again, 280E takes a big dent out of those profits. You know, ROI is difficult to calculate in this space, whereas the ancillary companies don't have to deal with that. So, right. You know, I don't know what you guys are seeing from a scale standpoint, Jeremy. I know you operate. Are you in 2 or 3 states?
Operating in 2, building out a couple more.
Yeah.
Yeah, well, I guess I would say, first of all, we are not profitable. You know, we still are burn. We're still on our burn right now. We have been building out and operational in Illinois for about 2.5 years, and in New York for about 1 year and some change. And we also operate in the kind of the most regulated markets in the East, and so there are artificial barriers to not only to entry as a licensee, but also as a patient. You know, there aren't 20,000 patients in Illinois. There's 19,600 or something like that, and there are 15, 18, maybe 17,000 patients in the whole of New York State. And so, because these patient counts in these states are very low, we still we don't have a lot of patients per day, and that patient spend is not, you know, it's $200 once or twice a month is the patient spend, and so but what I can tell you is that month over month over month over month, our revenues are increasing and the patient counts are increasing. So we feel like we're on the right sort of the correct side of the curve towards profitability, and it's slow. And I run lobbyists in Illinois, I run lobbyists in New York, Maryland, Pennsylvania, and Ohio. And so we work very, very, very hard to be influential in those states to help them understand and see kind of what the face of the cannabis industry is and ought to be. And you can trust us to open up, to add a condition like chronic pain, to allow nurse practitioners and physician assistants, in addition to physicians, to make the recommendation. So that's we're not profitable. We're marching towards profitability, and we're working very hard and spending a lot to try to create a better regulatory environment for that event.
Okay, interesting. I'd like to get to valuations because I know Michael has to drop off soon. There's since I mentioned all the kinds of startups that are out there, how many companies have gone public in this space? Does it all depend on state licenses, who you should be investing in? There's a lot of questions there. How, as somebody has typed in, how do you even value a grower? Where do you start?
Yeah, no, it's tough. No, here we are in Illinois. It's amazing to see valuations even here in this state, and this state's different than others. But some for growers and folks who've been able to get licenses, people ascribe a certain value to those licenses regardless of whether or not they're even producing any product. So it was ridiculous. A few years ago, you'd have folks trying to get at $15, $20, $25 million of valuation per license that they had. That's one state. I think things have changed. People realize that you actually have to do something from that, but actually, the way that it's set up for conditions and patient count and everything else, makes a real difference. So, but I would say, there isn't like anything, there isn't really a very clear formula for cultivators I've seen, because every state is different, and based on that state, people value it differently. For dispensaries, it's become a little bit more common, and I would say, I've been shown and seen lots of different deals on the dispensary side, and I've seen deals, mostly 80% of the deals range between a 0.8 time, to a 1.2x revenue for dispensaries, and that's about where I've seen the dispensaries. For the larger sort of ancillary market, again, most of the companies you're dealing with are startups, and so it falls very much into the venture world. It's the valuation is whatever those entrepreneurs are able to get, whatever the market dictates. I would say that a lot of entrepreneurs have gotten greedy in the sense that they've heard about this green rush. They believe what they're doing could be big. They believe that there's a lot of people interested in investing in the space. A lot of people who are likely unsophisticated. So a lot of people are going to market with extraordinary high valuations, which I think is going to be difficult for the market, or it will be painful to a lot of people a year or two down the road, with people raising money at high valuations, and ultimately if those businesses don't do well, you're going to have a cram down. People are going to have to raise money at a much lower valuation. But right now is sort of frothy times on the private company side, and where it's my job and David's job to build as many quality relationships with strong management teams that have a good operational vision, and try to really work with them to have a good balance of that valuation, a right entry point for us, but also allow for enough of a big upside for all the stakeholders.
Yeah, I think it's a wasteland out there in terms of valuations. It's a lot like the .com rush. Gartner and Forrester are not covering the marijuana industry. There is no public market comps to speak of. The public market itself is very limited. I co-created the algorithm for the marijuana index, which is, I still believe, the only real stock index of publicly traded marijuana companies, and fully half of the companies that are on there are pink sheet stocks on the OTC. There's been one or two Classic IPOs, but they're IPOing straight to the OTC. You can't get an IPO through the NASDAQ or, the NYSE or the Amex. But Canada has started to see some traction in the public markets. By the way, we haven't talked about Canada, but Canada is moving to a July 2018 launch of adult use nationwide. So a lot of money is pouring into that. There's a group out there called Viridian, which is run by a guy named Scott Greiper. They have a weekly deal tracker. It's 80% plus public market stuff that you can find in the 10Ks and the 8Ks and the S1s, but they've got a guy sitting there reading them. I watch that stuff on a pretty regular basis. The company that I ran, MJIC, that I restructured from an investment company to an operating company, is filed for an IPO on the ASX in Australia, which is also has a federally legal program. And the reason that that's important is because, as I think everybody on here understands, to go public without the base of institutional investment opportunity doesn't unlock the liquidity for your shareholders. All it does is create $500,000 to $1 million of compliance costs, and a lack of trading volume keeps the shareholders locked in and opens up, a whole host of other problems with being a public company. And so very little in the IPO space that's of any real valid, worthwhile interest. Again, Canada I would watch. I would start to watch Australia. They've had 2 IPOs. I'm hoping that ours is as good as the other 2. I'm no longer operating that company. We brought in a public company CEO. I don't have a public CEO temperament, but that type of ROI or exit strategy is still a long way away, in my opinion, in this market. The private stuff is hard to track, but I agree with Michael. They're all over the place. I tend to try to focus these startup companies in on the startup business valuations. There's a lot of information available out there. A pre-revenue, pre-product tech company, generally funds for somewhere between 1.7 and 3.2 billion dollars. They've got, $1 million. I said billion. That's crazy. They've got data and research to back that up. And so that's what I'm really trying to push back with these cannabis entrepreneurs and say, yeah, you want to put a little bit of a premium on it because it's cannabis, that's fine. If you've got a management team that can show me that there's been an exit before, but you're still a startup company. So I'm sticking with the startup valuation methodology that's tried and true in the venture market, and 20 years of venture experience allows me to access that information. I stay away from the arbitrary dartboard theory of valuations that most of the people in the cannabis space are, and we've already seen down rounds. I've invested in 2 companies in down rounds because they overvalued to the friends and family, which is unfortunate. They got a $10 million valuation for their friends and family, and we came in at $2.5 million. Not going to apologize for it, but that's what's happening. Everybody thinks, wow, marijuana, we're going to make $1 billion, and an unsophisticated investor has a great opportunity in this space because institutional capital is not finding its way in, but they also have a lot of risk because there's not a lot of real professional due diligence being done on these investments, and guys like Michael and I don't have a tremendous amount of competition right now.
And just to that effect, with that variance of valuations and teams, of which we're finally starting to get some quality management teams from traditional industries, financial services, the tech world, for folks getting involved, this whole portfolio approach of having a diversified set of 15, 18 so companies helps diversify and provide enough optionality for some of these companies working or not working, especially when we have lack of clarity for each of these states' regulations and knowing what may happen in the near term.
So basically, your investors are getting in, but they're not really able to get out. I mean, there's no 7-year average exit to exit, entry to exit. Okay. Well, yeah. Also, I wanted to ask, I know Mexico just a couple weeks ago legalized it. And did the Mexican president sign that bill? Are they now going to be going legal with medical?
my understanding is that the legislature agreed to put it forth. I don't know the legislative process in Mexico. I could tell you that from the time that a state or a country moves to legalize until the time that it's legalized generally takes about 2 years, and then from the time that it's legalized until the time that there's an actual economic footprint is probably another 2 years. So, you know, I think Jeremy's had some experience with that in Illinois, and we've had, you know, other scenarios. I see it speeding up a little bit. I mean, California will get to market quicker. Nevada got, you know, to market very quick in adult use, but they already had a medical footprint in place. So my guess is that Mexico is probably a couple years away from legalization, and then a couple more from any kind of a cannabis economy.
Okay. Another question we've gotten in. What would happen to foreign imports of marijuana under full legalization? Would they be outlawed, or would they become the low-cost producer? How would the FDA regulate foreign growers? Well, that we can't predict, but have you?
Yeah, that's, you know, it's a good question. I think I don't have that much information on that, but you could, a sort of contra to that is, I'm not sure if everyone's aware, but there is a fair amount of activity of exporting marijuana, not from the U.S., but as an example, Canada is a big exporter of marijuana to other countries. So, you know, they are exporting to Germany, to Croatia, to Uruguay, and to others. So, you know, it keeps on increasing, but there used to be a treaty of about 22 countries. I'm not sure if Jeremy knows if it's more now, but about 22 different countries have a treaty that allows export and importing between each other for marijuana, and I see that continuing to increase. But the caller's, you know, comment is a good one, because it goes back to my comment earlier. Is when these barriers, state barriers, go down, we have to compete on a national basis. And it opens up the question of federal legalization. Are we going to then be competing not only domestically with overseas producers, and you know, what will be the barriers from us in that? It's not clear to me, but I think that's why I'm very concerned, wanting to make sure producers are producing a good quality product at the most, you know, efficient price, so that they are able to create a really robust business for themselves.
Okay, Jeremy, you want to comment?
My only comment is that the takeaway. The takeaway is, and this is perhaps putting on my persuader hat. The takeaway is that the United States is falling behind when it comes to the global cannabis market. You know, people are, I don't want to say flocking, but moving their money, their investment money, to Canada, where cannabis is legal federally, and where these entities are traded on those stock exchanges, and where Canada is able to legally, lawfully export its products to an 80 million person market like Germany, which I believe in the next year or so, their insurance provider there in Germany, or insurance providers, will be allowed to reimburse for those expenditures. And Australia is another great example of a country that has decided that it's going to legalize and create this industry, create this market. And the United States, however, is kind of stuck in this prohibition era mindset, and is making this industry really complicated for the operators. And you know, I just don't see the upside in doing that from an industry perspective.
Okay, thank you. Okay, there's another question we have. Do you expect consolidation to occur across the spectrum so that an investor owns everything from greenhouses to retail? I think we might have covered this, but
I would just say right now it's sort of artificially. I don't know what the market will do. I think I do know what the market will do. Right now, the structure of businesses is largely artificial. In New York, if you are granted one of the 5 registrations, and unpacking valuation can also, one of the elements is what's the licensing scheme? Is it like a Western state where, as long as you are a minimally sufficient provider or operator, your name then gets thrown into a hopper, and there's a lottery for who wins the the number of licenses. In other states, it's a competitive process where only a very small amount of licensees are given out, or licenses are given out, and nobody else can enter the market. And so Michael referenced the intrinsic value of a license in and of itself, and that value is sort of dependent upon how many other market players are there and how hard is it for more market players to come in. But right now in New York, if you have one of those 5 licenses, you have to grow and process and transport and dispense. You have to do all. You are linked vertically. Whereas in Illinois, by way of contrast, the cultivation centers operate kind of independently, and the dispensaries, the 60 or so dispensaries, operate independently, and cultivation centers buy and sell freely in the wholesale market. So I do think that over time, those forced verticals will be broken up, because if you are an expert cultivator and you are implementing good agricultural practices and lean practices, are you necessarily is it your core competency to be dispensing cannabis through pharmacists to patients? Probably not. And so I do think you will see those things stratify. And I think that as formulation and finished products become more important, branding is a great component of that. You will see people continue to focus on processing after the plant, after the cultivation, after the plant is grown.
Okay. All right. The market is not even close to being ready for broad roll-up acquisitions, as somebody just asked, but it's not there yet. Okay. Is there even much to buy right now? I guess that's the question.
Buy, when you say, so that to me strikes the chord of, buying publicly traded stocks, investments, buying investments. I mean, sure, there's a lot to invest in. Michael and I are both sitting on cash, and the reason is because, we've talked about this, so I'll speak for him, but you could tell me not to. The real challenge is, and this has been the case for 25 years in venture capital for both of us, you invest in people more than you invest in product, and there just are not a lot of operators in this space who have the experience that you want to put your money behind. They're not ready to immigrate into the cannabis sector from Deloitte or from other operational companies. They're just they've got the same concerns that everybody else does, and so yeah, there's plenty out there to invest in. There's lots of opportunities. Very difficult for us to find deals to put our money into, people to put our money behind, especially now that we've moved towards Series A. We're no longer doing startup, seed round funding, and our criteria, for example, requires a minimum of $1 million in revenue. I mean, that rules out like 80% of the companies in the space right out of the gate. So yeah, there's plenty to invest in, but it's not something that, the reason we got into this space is because I thought venture capital was a dying industry to a large extent. With the information age and crowdfunding and all that kind of stuff, retail investors could, really start to participate. Institutional investors, family offices who are traditionally putting money into our funds, they can allocate $50 or $100 million to the alternative asset class on their own. They don't need to pay $2 and $20 to a $50 million tech fund. So in the cannabis space, we felt that the barrier to entry from professional due diligence standpoint was something that for some time is going to be a hurdle, and that's why we elected to continue in this space. So the answer is plenty to invest in, not a lot that we are putting our money behind at the moment.
Wow. Okay. Well, we are, okay, it's 2:10. Michael, you have to drop off in 5 or?
Yes.
Okay, well, I'm sorry to let you go. I'll ask this one quick. Which has the better margins, recreational or medical, and what would cause that to change?
Jeremy, that's probably your
Well, I don't operate. We don't operate in a recreational environment. Michael touched on, if you go to Colorado, the real difference between the medical and the adult use markets are there's a higher tax rate in the adult use area, and so you pay lower taxes in the medical side, and some of the formulations, there are higher doses that are available on the medical side because a terminally ill person may need a higher dose. And so that's what I can tell you about the difference between the medical and the recreational side. I don't know otherwise.
Okay. Well, if we don't have any more questions from the audience, I will go right into what is the future of the medical marijuana market. Sounds as if it's kind of already has a horizon out there that's about, it could crash into. Michael, since you got to get off.
Yeah, no, I think, again, I think that we talked about it a few times, is there really a distinction between medical and adult use? And I think that's becoming less clear. But I think our viewpoint is that it is it's a big market. It continues to get bigger and better. There's more medical conditions in each state which are opening up. And so I think, my belief is, I think, David and even Jeremy, alluded to, is I think there's going to be more and more of a collapse between medical and adult use. And, ultimately where we see, again, those numbers that are being projected of being, 25 billion, by 2020. So, that's what we're targeted on. And what we believe that increasing with this 80% plus public opinion support for medical marijuana, that we'll see greater support, greater legalization, and then increased dollar transactions within the space.
Mm-hmm. Okay.
Yeah, I would add something that may be a little controversial given the fact that you guys are healthcare M&A, but we won't make an investment into any company that has their sights strictly set on medical marijuana. If reputational risk is an issue for you, then I would suggest that investing in the marijuana space is something that you shouldn't be doing. I don't think that the medical market is sustainable from an ROI perspective for an investor, whether it's at the private equity level, the venture capital level, the public market level. And I see a lot of people dancing around the industry that are restricting, I can see touching versus not touching the plant because there's a risk profile there, but
Mm-hmm.
between medical and adult use, in my opinion, that's a really poor investment strategy. At the end of the day, pure play medical marijuana just isn't large enough to produce the return on investment that investors are going to want to get for taking the risk that they're going to take entering into a federally illegal product.
Okay. Thank you. Okay, Michael, I think you have to go.
Yeah, I have to go. Yeah, and I think all my information is on the slide. So if anyone wanted to reach out to me, feel free to. Thanks again.
Thank you.
All right.
All right. I'm going to go on. In talking just now about taxes and states looking for tax revenue, this seems like a no-brainer when if the American Health Care Act passes with that Medicaid block grants, states were going to be needing to fund Medicaid money. This seems to me as if maybe it's kind of a no-brainer for states to just say, okay, we're going to open up medical marijuana. Has that come out there yet?
Here's my reaction. Here's what I've observed, and it's only me. In Illinois, the licensing process took place in late 2014, and the licenses were awarded in early 2015, February of 2015. And during the development of that legislation, it was all about it was all about patients. And in Minnesota, that's another early sort of Eastern regulatory environment. And these cancer survivors and these mothers of children with Dravet's, a very virulent form of epilepsy,
Yeah.
are very vocal constituencies, and so they're clamoring at the gates of their legislators to develop and pass these laws. Okay. Well, in Pennsylvania, which is just right now in the process of scoring applications to award licenses, there was very much a different, and we spent a lot of time, I spent a lot of time in the State House in Harrisburg and in the State House in Springfield, and there was very much a shifting of the mood in Pennsylvania, which sort of next to Ohio and then Florida is a very recent convert to the medical space. New York was even very patient-driven, but Pennsylvania, we learned very early on that the 2018 budget of the state contemplated the license application fees, which range upwards of $100,000, $200,000, as part of their budget, which was, in my view, a real paradigm shift for these state lawmakers who are considering how these programs are going to be implemented and roll out. It was a patient thing, and now it's a revenue thing. And you're seeing in New York, which has a very restrictive medical environment, you're seeing the state next door, Massachusetts, which this past November just approved a ballot initiative to implement an adult use law in that state. And now that law is probably a year to 18 months away, but you're hearing noises in New York because they're feeling pressure of an adult use state next door. So how do we respond? It's a little bit like gaming. If Gary, Indiana is going to build a casino right on the border of Indiana and Chicago, they're going to siphon Chicago's money away to go gamble in Indiana. And I do think that there is some pressure on these states to identify, segregate, and keep patriated the monies of the state. And I do think that is part of the future of cannabis, how this industry is going to roll out. These pressures occur, and there are legislative responses, and those invariably are going to drive open these markets. I think that's how I view it.
Okay. David?
Yeah, I think money talks, and we're in an environment right now where almost every state in the country, except Colorado, is operating at a deficit. Coincidentally enough, Colorado brought in $200 million in cannabis tax revenue. Reputationally, nobody's stepping out in front of this and saying, hey, we want the money. However, what you have seen in the last few weeks, month, are the governors of the states who are pulling in the tax revenue, who have stood up to Jeff Sessions and said, bring it on. We'll fight you. You're not taking this money out of our coffers. We need it. It's been built into our budgets now, and it's going to be a very, very difficult fight. And I think you're going to see more and more states jumping on board and skipping over medical. Vermont yesterday passed the House and sent the bill to the governor to sign, skip right over medical and go straight to adult use. It's the first state in the country to do that, but it, I believe, is going to be a trend going forward. The reason for that clearly is monetary. If they're looking to legalize recreational use right out of the gate, the only impetus for that can be the tax dollars. And so I think you're going to see a lot of states standing up for the revenue that they're bringing in, and it's another thing that's going to make it very, very difficult, despite any rhetoric from the opposition, to stop this train, from careening ahead.
And if I'm not mistaken, David, isn't Vermont the first state to approve an adult, present to the governor for approval an adult use law through the legislative process versus through the ballot initiative process?
Yep.
Yeah, which is that's a watershed too.
Yeah. Well, if I recall your the states that have not, the 13 states that have not, I guess Vermont was one of those that don't have these laws. They look to be largely in the Bible Belt, what we know as the Bible Belt. Florida's obviously not quite there, but is there any talk in any of those states? Because I know a lot of those states did not go for Medicaid expansion in a big way either. So it seems to me they're more conservative and they just may not go there at all, or are they now talking about
There's
that?
not a state in this country that's not talking about it.
Okay.
Not a single one. It's legal in Louisiana. Arkansas passed. Nobody's beyond this. Utah's having conversations about it. It's, you know, again, it's the law of inevitability. I don't see any resistance at a state and local level, other than individual governors or, you know, state legislators that have strong-held individual beliefs. But it's polling, you know, in the 60s, 70s, and 80s in every state in the country.
Okay, so it seems inevitable. All right. Is there anything that, my last question is there anything that I haven't asked or that hasn't been brought up by the audience that you think is important to know about this market?
I will point out that there is, if you beat the bushes hard enough, there is a little bit of investment opportunity in the publicly traded space, and these can be what we're calling ancillary companies. You know, last year, Innovative Industrial Properties (IIP), which was a real estate investment trust, they purchased our New York facility as the flagship tenant of their real estate investment trust, and then they were cleared by the SEC to trade on the New York Stock Exchange. And so that's as close to a real institutional grade investment opportunity as I am aware of. There may be a couple others out there, but they do exist. You know, it's not trading very well, although I do know that IIP just picked up another tenant in Maryland, a cultivation.
Yeah.
You know, a cultivation company that's in the process of, they'll do a build-to-suit of some sort for their facility in Maryland. So, you know, there are slowly but surely the cracks in the dam are getting bigger, and it's coming. And we are, you know, we are always on the prowl to raise capital. It's just part of what we do as a company in this phase. Mm-hmm. And you know, we are seeing a transition from the high net worth individuals to the single family offices, to the multifamily offices, and then down the spectrum. We are seeing that just over the last 6 to 8 months. We're seeing that shift kind of before our eyes. So it's certainly happening. And you know what? 6 months in this industry is like a lifetime.
Yeah.
Sort of like the 2 weeks in the Donald Trump administration.
Right.
Okay. Well, I mean, to David's point, money talks. And that's where people will go. Okay, David, is there anything you think our audience?
I would come behind Jeremy and say there is opportunity in the space. You need to exercise caution. You need to invest alongside investment professionals. I believe we're in what I have termed Cannabis 3.0. Cannabis 1.0 was, you know, the early adopters. The state of California was primarily just activists that were, you know, trying to move something that they felt was hypocritical into the mainstream. And around about 2008 or 9, you started to see Cannabis 2.0, which was really just activists turned businessmen. It was the formalization of a commercial cannabis economy. Now we're into Cannabis 3.0. I had forgotten about Innovative Industrial Properties, but they did IPO on the NYSE. However, they're real estate. They're far enough away where NYSE was, you know, and the operator had a previous history with a publicly traded REIT. So you're starting to see institutional capital come in. The company that I run now is backed by a $2.5 billion private equity fund. There are people quietly, I call them accidental tourists. They've got a portfolio asset right now that's underperforming, that all of a sudden they realize has an application into the cannabis space, and so all of a sudden cannabis isn't so bad. It's a lot better than a write-down in a portfolio asset if you're a private equity or a venture capital fund. And that's the first proliferation of real institutional entry into the space, and it's going to happen more and more. You're going to shut your doors, or you're going to start selling your product into the cannabis space. Scott's has led the way. But, like Jeremy said, if I'm an investor in the space, if I'm not going to invest in a fund because that's just not what I want to do, you want to look for operators, like PharmaCann, like Jeremy and his group, and believe it or not, several of the groups out of Illinois have emerged as, in my opinion, the leading companies in the U.S. on the cultivation side. As restrictive as Illinois was, and I would not touch it with a 10-foot pole when it came out. I wouldn't put any money into it. I thought it was going to be a disaster. I still think it's got an uphill battle, but what you're seeing is the restrictions that were put on these cultivators required that they be economically viable and very, very strong operationally. Guy with Jeremy's credentials, you don't see in this industry every day. And so I personally, if you're going to go it alone, I would look for companies that have traction and that have a team like PharmaCann's team, and they're going to have a higher valuation. But in my opinion, if you're investing, as a retail investor on the outside looking in, even as an accredited investor, you're a lot better off looking at those deals than, for example, going to an ArcView meeting and seeing 9 startup companies with no money, no revenue, with a $5 million valuation that you could talk down to a $3 million valuation. But yeah, there's tremendous opportunity, but tremendous risk.
Yeah, I would say make sure you have a good Sherpa, because what I see a lot of times are, groups with some capital who are looking to deploy the capital in the cannabis space. They look around and they find a 25-year-old intern, and then they send him to a trade show, and then that person comes back and is supposed to guide them through the cannabis space. And there's just so much to unpack in this space, and there are so many operators, we've kind of harped on this, who are not sophisticated and who don't have the right mindset and who don't have the right experience. And those people are kind of a dime a dozen, and they'll all sell you their time or their expertise, and you know what, they'll take a little sliver too. And so there's just a lot of that out there, and so I think you really have to work to find the right sort of Sherpa in the cannabis space to be able to unpack the differences in states and the differences in philosophies and the differences in medical versus adult use and the differences in touching the plant versus not touching the plant. It can be a complicated process.
Yeah, co-investment in this space is much greater than it is in any other space that I've been in. We co-invest and syndicate almost every single deal we touch with companies like Salvio and other venture capital firms, and we also have built a structure where our investors can sidecar in a Series A round. If we take $1 million or $1.5 million of that Series A round, the fund may put $750,000 or $1 million in. We'll let our investors buy up the rest of that investment. And so, and to Jeremy's point, we're professionally curating deals and then allowing the retail investors to piggyback on us. Of course, if they're investors in our fund, but our fund's got a small $100,000 minimum, and there are plenty of guys that want to put way more capital to work than that. So I agree, whether it's a fund like ours, collaboration in this space, you want to find somebody that will let you invest alongside them, that has professionally curated due diligence, an analyst that has got some experience in the space, and there aren't a lot of them that are out there.
Well, I have to say, I think you and Michael, Jeremy, and David, you have been great Sherpas for our audience today. I really appreciate your time and your insight. And I'd like to talk to you again another 6 months, see how things are going.
Our pleasure.
Okay. Well, thank you. And I would like to turn it over to Kate to talk us out.
Thanks.
I want to thank all of our speakers and listeners for participating today. After the webinar is complete, an evaluation form will appear. Any feedback on our webinar is greatly appreciated and will be used to improve our future broadcasts. A recording of this webinar will become available tomorrow in your membership site. Please join us for our next webinar, Real Estate versus Business Value for Healthcare Properties, on May 25th, 2017.
Marijuana properties.
Thank you, everyone. The webinar is now concluded.
Thank you all. It was really great.
Thank you very much.
All right. Bye-bye.
Bye, Jeremy.
Bye-bye.